Hi, Tyler. We think AMD is obviously feeling the cyclical pressures of all the other chip companies, but the difference here is that the stock price is already pricing in a huge rebound. It's pricing in that margins will triple and that the company will grow revenues at 15% compounded annually for the next 15 years. So we think all the good news is priced in. We would pass on buying AMD at this point.
All right. Pass. What about Amazon? CEO Andy Jassy telling Mad Money's Jim Cramer he's seeing a very resilient consumer. Take a listen.
Consumers are still spending. They're being careful about what they spend on, and they're looking for bargains and deals wherever they can, and wherever they can trade down on price, they're trying to do so. And it's really why, if you looked at what we did in our holiday season, it's always important to save customers money, particularly during the holidays, and especially in this type of economy. And so we, in our Prime Big Deals Day, which was our exclusive event for Prime members to kick off the holidays, we had tens of millions of deals, and it was by far the best kickoff event that we ever did.
Well, there you go. David, what about this one? Did you pick it up?
No, we wouldn't, Kelly. And look, I'm a big user. I love Amazon. It's a great product, but those deals come at a cost. Most people don't recognize that Amazon is actually a very unprofitable business. We show that they have burned $175 billion over the last 5 years. And you can see this on the balance sheet as debt's gone up dramatically over the last 10 years. That's how they funded the losses. And the stock price is implying a drastically more profitable future. Margins will double, and the company will grow revenues at 15% compounded annually for 30 years. So it's in some ways even more expensive than AMD. So look, I love Amazon as a consumer, and I think all consumers should love companies that are losing money giving you such good deals. I mean, it seems too good to be true because it is too good to be true. So yes, we would pass on Amazon.
But they report profits. And they make money in their clouds division and so forth. But that's, I guess, your point would be they're actually using that money to subsidize losses in other businesses.
And it only partially subsidized losses. And look, Tyler, I mean, companies report making money all the time, but they don't really make money.
Yes.
We can't trust the adjusted numbers. We can't trust the GAAP numbers. You got to do additional diligence if you really want to understand fundamentals. That's just the bottom line. And yeah, when you do that work and you pay attention to the balance sheet, in particular for Amazon, it's a much more capital intensive business, including Amazon Web Services, Tyler. It's a very capital intensive businesses. They've got all the servers, so no one else needs one.
I was amazed to learn last week that apart from the U.S. Postal Service, the largest package delivery company in the country is Amazon. It's not UPS, it's not FedEx, it's Amazon. All right, last up, ExxonMobil CEO Darren Woods telling David Faber he likes the long-term picture for energy despite the drop in oil prices this week. Listen.
We don't get too focused on the short-term dynamics in the marketplace. We tend to look more longer-term at the fundamentals, and I'd say over that longer term, generally speaking, it's a depletion business. We see every barrel of oil that the world produces is one less barrel available. And so that depletion business requires constant reinvestment to maintain, if not grow, the supply. And so we tend to look at that longer term. And I'd say investment into that, replacing that depletion is on the light side. It has been historically, continues to be on the light side. So our view is over the longer and medium term, the market's going to remain fairly tight.
Let's talk ExxonMobil, David. What do you think?
We like it. We agree very much with the CEO. I think, look, the ESG kind of movement really moved a lot of capital away from oil and gas and fossil fuels. And I think we're all coming to the conclusion that the decarbonization of the world is going to happen, but it's a long way off. 15, 20, maybe 30 years. In the meantime, people are going to go for the cheapest source of fuel. And I think over the next 20 to 30 years, a lot of the major energy distributors today will be shifting with the market away from fossil fuels to other alternative, lower carbon fuels. But regardless, they'll be the same companies. They're in the business of distributing power. They're the best in the world at it. And they have excellent access to current low-cost fuels. Plus, my favorite, Tyler, Exxon is cheap. Right. It's trading as if its profits will permanently decline by 30%. We like that.
All right, David, thanks. Appreciate your analysis today. David Traynor, thank you.